Greetings, members one and all of the Salivation Nation. Could gold drop $100 next week? Let's explore. You know, it seems unlikely considering where we are headed, but that is the thought about some analysts about where gold could go. We did see it drop fairly substantially in recent days. It's made a bit of a recovery now after some of the reports that have come out economically. We did see some job creation, but prices actually went up a little bit. But there's some other concerns about other sectors of the economy with regards. Silver's up as well too, but gold is now trading above $1,800, but it did dip below $1,800 momentarily. So there's an article here from Kitco asking the question if gold price is at risk of a $100 drop next week. And of course, it didn't drop $100 this week, although it kind of seems like that with the title here. Gold was oversold this week, the article mentions here, after prices tumbled below $1,800 on Thursday. And even though analysts remain firmly bullish on gold next week, there is still a risk of another washout below $1,700. The reason for the end of the week's selling pressure was the stronger U.S. dollar and steepening yield curves, according to analysts. The downward move was further exacerbated by the technical selling, said Ronan McConnell, head of market analysis at EMEA and Asia regions at StoneX. Once again, the tangible driver was the dollar, encapsulating a series of encouraging economic and financial developments. The yield curve has continued to steepen, McConnell said, and gold dropped below $1,800, and the move would have been extended by technical and momentum traded. A big part of the move resulted from technical action called the death cross, which happens when the 50-day moving average is close to crossing below the 200-day average. If this does come about, then the technical pressure on the spot price will be exacerbated, added O'Connell. The U.S. dollar is likely to remain one of the primary drivers for gold in the short term, said Kitco Metals Global Trading Director Peter Hugg. Over the past 2 days, we had relatively significant dollar strength. The euro dropped about 2% this week, in line with gold's drop of approximately $40 on Thursday. Gold seems to be trading along with the dollar. Keep in mind the dollar is the top of the breadbasket of currencies out there, and over 60% of nations trade in the dollar. The rise in 10-year yields is also adding to U.S. dollar strength, as more inflows are going into the greenback. Another piece of the puzzle was the silver squeeze phenomenon, which ultimately impacted gold as well. And I mentioned that earlier, saying that, for the first time in quite a long time, gold actually followed silver. Usually it's the other way around. This is from RJO Futures Senior Commodities Broker, Daniel Pavillones. Gold responded to silver first by going up and then selling off. Next week, his likely outcome is more bargain hunters coming into the market at a better price, said Hugg. Right now, gold is in a bearish neutral territory, said Pavillones. We will see a bounce here. The stimulus package will also eventually play a significant role for gold. It has already been set up in a way that the Republican support is not needed. Stimulus won't go into the economy until mid-March, but it is coming. It is still a very constructive metals market. Plus, there are issues with the pandemic, like the new virus strains. All this means that central banks and governments will be fiscally accommodative. This is a recipe for positive momentum in the metals, he said. Stimulus headlines have been driving the gold market up and down. The turbulence will continue until the actual stimulus comes out, which is when gold will finally move solidly higher, explained Pavillones. More stimulus will likely mean that the U.S. dollar will be further devalued and gold will receive more support, said Phoenix Futures and Options President Kevin Grady. The macro environment remains positive for gold, supportive, which is what Bart Mellick from TD Securities, head of global strategy, mentions. At the end of the day, there's still a big problem with the economy. Today, we've seen the third month of disappointing economic data, and we are at risk of a double dip. Markets are not focusing on this yet, but they will. We will continue to have massive debt accumulation. The hope that economy will go gangbusters sounds like a flat argument to me. And, a lot of these arguments and statements that we're hearing from this article are bullish for gold into next week, not the other way around. The bad economic data Mellick referred to was the U.S. employment report from January, which showed that only 49,000 jobs were added. They were expecting 50,000. But to me, that still seems like positive news. Anytime jobs are added, I think that's a good thing, especially when we saw a loss of jobs last quarter. Price levels. Gold solid support is between the 1775 to 1780 range, noted Hug. First resistance is at 1822 to 1825, and then at 1850. And then the next level up is $50 higher at $1,900. Thursday's lows offers support levels, added Grady. On the upside, gold will have to break the resistance of 1850. Gold is heavily oversold, said O'Connell. Resistance is clustered around the four major averages between 1837 and 1854. But there is a danger zone, and that's where potentially we could see it go lower, of another washout of gold. And that could take prices below $1,600 an ounce, and quickly, analysts warn. And even though it's an unlikely scenario, if prices close below 1766, it is a possible one. They'll see that, and then it'll kind of just extend those losses. And as we saw with the last day or two here with the losses in gold, well, likely you're going to see some of these people, and some of this they're basing on technical analysis too. And this is what we're getting at here in the next couple of quotes here. And once they close above 1970, then it's a bull market. Same kind of strategy that's into play, both technical and psychological. There's still a risk of gold losing another $100 on technical selling, warned Mellick, but noted that it would be an unlikely drop. Don't think it will happen. I still like the $2,000 gold target. That's kind of where I'm at too. I believe that most people are bullish on gold, even through some of these dips. I think that's something it is noteworthy, is that most people are bullish on gold, but a $100 drop would be significant for sure and unlikely to happen. Hug added that he would be surprised if the next major wave in gold would be down. He expects it to go higher. But it's a possibility. And if it does happen, it's something that we should not be too concerned about. Unless we're buying, then we want to probably throw in maybe some dry powder in order to increase our holdings of gold. That's something I may consider doing if at all possible. I don't know, but we'll see. But what's to watch next week will be a light data week with U.S. inflation data scheduled for Wednesday and jobless claims on Thursday. And the U.S. inflation is becoming a prominent theme for financial markets, with a growing suspicion that its rise could be larger and longer lasting than the Federal Reserve is currently anticipating. You may remember I talked about, that they're okay with another 0.5 percentage point increase in inflation. In other words, their target is about 2.5% for the next while, as opposed to just 2%. Next week, we look for CPI to rise. That's a consumer price index to rise 0.4% month on month. It's almost a 0.5 percentage point for the consumer price index, primarily in the back of a 10% increase in gasoline prices. We have seen gas go up, and notably much here. This would push the annual rate of CPI up to 1.6%. So there you go. So there's where we are at. And so this article, I think, is cautiously optimistic that that $100 price drop won't happen. But it asks the question, and we've given a scenario where it definitely could happen, both on the psychological and maybe even technical side. We'll see how it plays out. I kind of don't think it will be, but again, the prices move. They're pretty volatile for both metals, but especially silver. But gold's downward trajectory at times is something we've dealt with before, even when it doesn't make sense at times. And this, in many ways, wouldn't make sense, but I think this article kind of articulates it well as to why it could happen. But we'll see. Unlikely, though, as these analysts say, but it's something to keep an eye out in case you are in a buying mode. So there you have it. Very interesting to see the movement today. Gold, silver, both making a little bit of a recovery today. We can see that silver's back above $27 an ounce, and gold is above $1,800 an ounce. So they're starting to kind of snap back from that, from getting smacked down, from the smack down to the snap back. And there it is. So let me know your thoughts in the comment section below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.